Uganda continues to trail its peers in East Africa in the utilization of capital markets to finance major infrastructure projects. The issue is expected to be among those to be discussed in the upcoming National Social Security Fund's annual members' meeting, the fund being a major institutional investor in the country's capital markets. Hello and welcome to Money Matters. Coming up on the show, the cost of unplanned manufacturing developments, credit insurance, and whether it actually protects you. But first, Northern Uganda today has some of the soils and huge tracts of land for commercial agriculture. While this presents a huge potential for business, much of it is yet to be tapped. The Executive Director, Private Sector Foundation Uganda, Gideon Badagawa, shares with us what is being done to change this.
Gideon, it's very nice to have you on the show, Money Matters. It's been a while, actually, since we last had you on the show. But just to go very fast into what you're doing at Private Sector Foundation Uganda, I really picked that Northern Uganda Economic Empowerment Week, which you've come up with. What is involved in this, and what are you looking at?
Well, quite a number of things here, and it's the second time, actually, we are going to Northern Uganda. We were in Northern Uganda for the Economic Empowerment Week last year, and the theme focused on the potential that this part of the country has for investment, for business opportunities. And we thought we would still go back there because of the disparities that are still there in terms of poverty levels, and in terms of, therefore, income inequalities. Because we are looking at how do we build household incomes.
Coming to this theme, and because the Northern Uganda Economic Empowerment Week, why Northern Uganda this time around?
Now, as I told you, there are disparities, and looking at the surveys that have been undertaken by the Bureau of Statistics, you'll see that there, and even Economic Policy Research Center, there are disparities in incomes. And we want everyone to be involved in the economic growth of this country. So when we mention 6%, when we mention 8%, and we have even grown up to 10% in terms of economic growth, but you realize that not much of our rural populations have been involved in this growth, what we call inclusive growth. So the reason we are going to Northern Uganda is, one, to recognize that there are people that are not participating as much in our growth and therefore should be included. And this is where you have, therefore, the income inequalities, and we want to raise their incomes. And how do we raise their incomes? Especially through agriculture and agribusiness. Because
actually my following question to that was going to be on the potential that Northern Uganda presents in the area of agriculture productivity. I mean, is it an area that you feel, wielding that kind of potential to actually get Uganda up there?
So huge a potential. So huge a potential. I'll tell you that, of course, many of us have been there, Northern Uganda. At least the projects that we have been handling as PSF, most of these projects have been focused on Northern Uganda. And the recent one being actually under the PRDP, where we worked with the DFID to support activities, and especially so focused on commercial agriculture in Northern Uganda. We have been traversing the region, and there is such a huge potential for agriculture. There is such a huge potential for tourism, for trade and commerce. And we have not taken advantage, we have not harnessed as much potential as we possibly should have in terms of luring investors to come and take advantage of the opportunities that are there.
Very good.
A lot is happening, a lot needs to happen.
Yes.
There is some production that is happening, but not as much value addition, as much processing of our seeds that we export in maize, groundnuts, and so on and so forth. not as much value addition is happening as we probably should have had. Even in fruit, in the fruit sector, we are not extracting as much juice from our fruits as we should have. And the reasons are simple. The kind of technologies that we use, the kind of skills that we have, especially for enterprises or companies that should be doing this, the kind of, the cost drivers, electricity, the capacity, the rural electrification has not sunk well enough across, especially through northern Uganda. A lot needs to be done. There is a lot of effort through the cooperatives that we have in Acholi, in Lango, in areas of Teso, especially for the fruits, and even in the case of the dairy farmers across the cattle corridor, right from Teso down to Bunyoro region and so on. But not as much milk is being processed there as it probably should be.
Yeah. Now, looking at the environment under which you operate, I know some of your members have raised concern over the tax regime under which you operate, especially in regard to value addition. And one of the areas of concern, of course, I can look at is packaging material, attracting tax now, and a number of other inputs that are needed to drive value addition, and some going into the agriculture sector. I don't know, what's your view of that, and what's your level of engagement maybe with government?
I think there is a misnomer here. You cannot have your priority as agriculture, because we all know that we have a comparative advantage in agriculture, and therefore we should do all it takes to have a competitive advantage, because you can have a comparative advantage, but you may not be able to compete because you are not fulfilling certain, facets. And one of them is the cost that goes as you add value, that goes into the the final pricing as you add value. And one of them, as you're saying, is the cost of packaging, the cost of branding, the cost of securing the standards, and so on and so forth. Now, we have all known under the National Development Plan that we are pushing agriculture and tourism as the front sectors that will provide opportunity for us to enhance household incomes, to build the capacity to create jobs, but also build the export base. These are three things that are going to drive our economy. But you cannot put these as the priorities for the economy and stifle them through taxes. I think this is what we have said before.
There is increased spread and development of warehouses and industrial complexes in several city suburbs, as well as neighboring districts such as Wakiso, Mukono and Mpigi. Of concern, however, is the fact that a number are being established in residential areas, not only complicating municipal planning, but also posing health risks to communities. Enumerating these risks and what is being done to arrest the situation is the focus of our Insight segment today.
Within Kampala City and its neighboring districts of Wakiso, Mukono and Mpigi, one may not miss seeing such industrial units and warehouse developments erected in areas clearly meant for residential use.
So warehouses in residential areas, ideally that shouldn't happen. Industries and factories belong to a commercial area where you can have your noise and manage communal waste management facilities. But in circumstances where the closure of a factory means loss of livelihood for an individual, what would you do?
The Uganda Investment Authority, on the other hand, reveals a record 113 planned investments licensed last year, with a portfolio of 775 billion shillings. Projects under development must be well supervised, the agency says.
So they should be able to advise the investor. They said, no, we cannot allow you to put up this industry in this area because it's gazetted as a residential area. Okay? Because the plans for the building structures and all that are submitted to them for approval. And it is at that point that they should be able to advise the investor or any company that that is setting up such a business.
A case in point is Wakiso district, perhaps owing to its close proximity to the commercial status of Kampala city. Officials in the planning unit of Kira Town Council say that the fast rising value of property in the location is attracting industrial developers alike.
So in terms of warehouses, because the rate at which the place is developing, you realize that the value of land is really increasing at a high rate. So we are faced with that challenge, and we have to face it and look elsewhere to see how we can provide our people better.
The National Environment Management Authority NEMAS says that the issue of industrial projects increasingly being established across residential areas is a tightrope to juggle.
You need to understand that Uganda is at that level of economic development where people grapple with basic survival. So if somebody is going to put up a facility that employs some people, that provides livelihoods for people, then you want to approve it to propel an economy to grow and guide them on the basic things, not to cause harm. So that's where the challenge is.
But with the Namanga and Bweyogere industrial parks covered up, the Investment Authority says local governments must borrow a leaf from it in structuring locations of factories.
You know, we have Namanga, we have Ruzira, we have Bweyogere. I would expect that the district like Wakiso or Mukono should be able to borrow a leaf from what has been established in Kampala. Okay? Or any other district of country, whether we are talking of Jinja or Masaka or where. Okay? It would be a good idea.
All the same, it waits to be seen whether enforcement of existing licenses for warehouses and industrial development, which end up in residential locations, will now be controlled.
Every time one gets a loan from the bank, the common practice is that they pay for an insurance policy to cover it. We take a look at the provisions of this cover and whether these benefit the borrower.
This week we are looking at the insurance you pay when you take up a salary loan. Because salary loans have no collateral, the insurance payment you make covers it. All insurance for salary loans covers death. If you die, your family won't be bothered. But there is more to the salary loan insurance.
It also covers permanent total disability. That means the borrower has become disabled, is unable to continue working, and therefore is unable to continue paying the loan. The other thing that's covered is abscondment. That means the employee just disappears from their place of work, and yet they took out a loan. So the bank has to go and do some background check. Because you see, when you're taking out this loan, you actually put in a next of kin, you give them a map of your residence, so they have to go to your residence and prove that they are unable to trace you from there and from your next of kin. Then it also covers critical illness. If a borrower becomes critically ill and they are unable to pay back this loan, the bank recovers the outstanding loan amount.
The most interesting is the case where a job is lost or terminated. You are supposed to be covered, at least in the interim.
When it comes to loss of employment, the insurance companies do an assessment. And normally the trend is if somebody loses employment, then within a period of 1 year, you should have gotten another job. You should have placement somewhere else. So most insurance companies will pay back the bank 12 monthly installments. And these installments are actually paid back to the bank on a monthly basis. It's not a one-off, it's not paid to the bank as a one-off.
It has a limit of 12 months, during which time it's expected you should have got a job to resume payment.
As you take up the loan, yes, you need the money. But as you take up the loan, read the document. Take time and understand all the nitty-gritties in the document.
So far, you have no say in what insurance covers because you are not a key party in the picture.
Now, the agreement is between the insurance company and the bank. It is a contract between the insurance company and the bank, and not the person who has taken up the loan. Because at the time of indemnification or at the time of paying back, they are not going to be paying back the person who has taken up the loan. They are going to be paying back to the bank.
It's now evident that for Uganda to create jobs for the unemployed, skills training is key. This week on The Entrepreneur, we talked to young high school upcoming entrepreneurs running small businesses at school under the monitorship of the Junior Achievement Initiative Uganda.
To many, it would sound unbelievable to say that a student as young as 17 can start and run a business. But with the right mentorship, it is possible.
Our company's name is called Dalmex Black Shoe Cream Junior Achievement Company. And we started it in 20th April when the Junior Achievement members, 20th April 2014, when the Junior Achievement members came to our school to give us knowledge about junior achievement, to give us knowledge about being creative and innovative. Therefore, we came up with a plan after being educated by the Educate Uganda, who told us out to make black shoe cream and liquid soap. Then, after a while, we targeted the female and male sex. Therefore, we have been selling it to customers. We started being a small community, that is Kalinabidi community, and right now we are selling it to wholesalers, supermarkets and ShopRites.
These young students at high school level are running a shoe polish making business, a critical effort in light of the high unemployment in the country, which stands at nearly 83% today.
We produce 100 tins, and that 100 tins is equivalent to what we call 150,000 Ugandan shillings, and we only use 50,000 shillings when we are investing in the capital. And when we make the 100 tins, our profit is 100,000 shillings. Therefore, we get 150,000 shillings, the 50 for the capital, and the 100 is the profits per week.
But how exactly do they undertake the product process of this key item so much sought after by shoe wearers?
1 kilo of charcoal dust can produce like 10 tins, and I think we only use around 30 mins. I use 30 mins to produce 100 tins, and 100 tins we always produce them in a week.
These youngsters are tickled by their enterprise and are very confident that their financial standing is increasingly getting stable by the day.
This business has helped us, whereby right now, we the members, they don't chase us school fees, whereby the profits we have are enough to support us financially with school fees, and when the parent or guardian gives us back the school fees, then we pay back.
Even more challenging is the capacity. They have to produce a few tins of polish and the financial knowledge.
And in 5 years from now, we are assured that we are going to make an industry in Uganda in 5 years from now. Because of this, it has helped us because we have been selling it to supermarkets, wholesalers, ShopRites, and now we pay for our own school fees in school.
Nevertheless, they have a vision in as far as their growth is concerned.
Financial support, and we are doing our products locally. We need to get an industry, or we need to get an industry whereby we can get our products made or manufactured using industrialized materials. Because right now we are using our bare hands. We are doing them locally, and we are putting a lot of efforts, money, time and everything.
These are part of the hundreds of fledgling entrepreneurs who are being guided under the Young Achievers program.
The essence of this is there's a lot of best practice sharing. Because when you are on your own at school, you would think that you know it all, or it's very impossible. Because most of them, they can say, oh, it's difficult, oh, we have this challenge. But when they come here and see different companies, different ideas, as you've seen, ranging from food, ranging from crafts, ranging from IT, they realize the broad ideas that are out there that they can build on. Because our encouragement is after the learning team, individually, you're supposed to start something, to start looking out individually. What can I do? What can I start with? So this is best practice sharing. As they compete, they also learn from each other. They form partnerships.
Let's now turn to the equity markets and pick the latest there. That's all we had for you on this week's edition of Money Matters. Do join us next week, same time, same place. And remember, we would love to hear from you. So drop us an email or get into our Facebook page and we'll get right back to you. Till next week, bye-bye.